We are coming to you today with the special Hurricane Irene edition of Stock Market Savant. I hear the wind is really starting to pick up on the east coast of the U.S., as observers in the area have reported that a lot of white caps out there in the Atlantic and the waves are breaking big.
Most people down here in Florida are really glad Irene decided to bypass us and head up the coast, except, of course, the surfers, that is. But seriously, Rob, I hate to bring you another Cassandra call, but at informationinvestor.com, we not only tell you what to buy, but what to avoid.
For our listeners not up on their Greek mythology, Cassandra was the prophetess of doom.
Exactly. You know, the East Coast has really gotten a 1-2 punch this week. First, the 5.8 earthquake in Virginia, the largest quake in the East for almost 100 years. It reverberated from Tennessee to Massachusetts. And now, a powerful storm has hit, and it looks to scour the coast from Kill Devil Hills, North Carolina, to Arcadia National Park in Maine.
Wow, that is a huge slice of coastline.
Absolutely, over 1,000 miles. This latest disaster will mark 2011 as the costliest year in terms of insurance claims ever, easily topping the $38 billion mark in estimated payouts for the year. So we're advising all of our clients to avoid insurance companies in addition to bank stocks.
You got that, listeners? You heard it here first. George, what is this going to do to the economy?
Robert, that is a great question. I mean, look at this. In something of a triple play, the Richmond branch, that's Richmond, Virginia, branch of the Federal Reserve announced last week that business activity in their sector was already slowing. This hurricane, now tropical storm as it passes into Manhattan, is affecting over 65 million people on the East Coast and will only further dampen business activity. Now, manufacturing in the New York and Philadelphia areas already registered sharp declines in July. After the hurricane, a business disruption and cleanup will make matters worse.
But George, you're saying to avoid the banks? Didn't I hear this week that Warren Buffett was buying into Bank of America?
Yes, you did, but I want to caution all of your listeners out there not to invest behind Mr. Buffett. He got a sweetheart deal. He bought a special preferred share with a 6% dividend, and he got warrants to purchase more shares for free for the next 10 years. Instead of saying he invested in Bank of America, better to say he robbed Bank of America. Now, Rob, today, Bank of America is up 8% on the sale of a large stake in China Construction Bank. So it is apparent that they still need to raise additional capital in order to meet these more stringent international standards that are coming out this fall. So I would avoid not only Bank of America, but all of the banks, both here domestically and internationally in Europe at this time.
Wow, sounds like a lot better deal than the toasters that the banks used to give away. George, do you have anything else for us as the gale lashes against the window panes of a lot of the different East Coast residents?
Yes, Rob. There's one more warning that the smart money doesn't want you aware of. The continued potential for calamity. Now, not many people are talking about the yield on the 3-month Treasury note, but last week it was negative, meaning that investors, the big money, were loaning their money, their funds, to the U.S. Treasury, knowing that they would get back less.
But at least they will get most of it back. Is that your point?
Right. Again, with the ongoing banking crisis in Europe and the U.S. Fed having to loan over $500 million in overnight money to several big banks over there, some large investors were concerned of a sudden bank insolvency, much like the Lehman crisis that crashed markets around the world. Because of this fear, they are moving money to extreme safety, no matter the cost.
And we would like to help you, dear listeners, to protect your portfolios. Call us in our Manhattan offices at area code 646-470-8655. You can also email us, wallstreet@informationinvestor.com. Anything else, George?
Oh, I'm glad you asked. Just one. Speaking of weather, there are early indications that a La Nina is forming once again in the waters of the Pacific. Last year, I was one of the first to talk of the La Nina pattern that was forming then. I beat CNBC and the Wall Street Journal to press by 2 weeks. Now, as with the just concluded event, this one will have important investment opportunities for for those who get there early. Call our Manhattan office for our #1 recommendation, which hit fresh 52-week highs just last week on a great earnings report. Oh, by the way, see my weekend post on bostonwealth.net. Now, just remember, knowledge is power, and forewarned is forearmed.
Once again, thank you for tuning in to another edition. Unfortunately, this had to be a special hurricane edition.
Any other pitch you want, then call us at, again, informationinvestor.com, where we stay on top of the information for you, dear investors. Call us for advice on your portfolio. Call us for our latest recommendations.
646-470-8655.